Hello everyone, welcome to Easy Maths. So in our previous part of Introduction to Percentages and Interest Rate, we understood what discounts are and why businesses offer discounts to the customers. In this video, we are going to be familiar with tax and its types such as sales tax, income tax, and value added tax, which is abbreviated as VAT. We know that tax is something which we go through in a daily basis as we are involved in buying and selling of goods and other services. Now, if we consider the definition given by Investopedia, taxes are involuntary fees levied on individuals or corporations and enforced by a government entity, whether local, regional, or national, in order to finance government activities. In economics, taxes fall on whoever pays the burden of the tax, whether this is the entity being taxed, such as a business, or the end consumers of the business's goods. The taxes are administered by the Inland Revenue Department. A sales tax is a tax paid to a governing body for the sales of certain goods and services. Usually, laws allow the seller to collect funds for the tax from the consumer at the point of purchase. When a tax on goods or services is paid to a governing body directly by a consumer, it is usually called a use tax. Often, laws provide for the exemption of certain goods or services from sales and use tax. So, sales tax is the tax for the sales of goods and services. And use tax is the term used for the tax which is paid to the government directly by the consumer. Income tax is used by government to finance government expenditure such as the armed services, civil services, and the national services, etc. Any person who has an income above a certain minimum amount has to pay income tax to the government. Income tax in Sri Lanka is based on the amount a person earns in a year, which begins on the 1st of April of a year and ends on the 31st of March of the next year. Certain amounts of each person's income are not taxed. These amounts are called tax allowances. The residue of the income left after the tax allowances are deducted is called the taxable income. For Sri Lanka, for the year of assessment 2006 and 2007, the tax payable on the taxable income was computed using the following table. The first column of the table tells you the taxable income range, which is in rupees, then the tax on the lower amount of the range in rupees, and rate on the excess taxable income over the lower amount. So any income within the range of 0 to 300,000 rupees, the tax on the lower amount of the range is 0 rupees and the rate on the excess taxable income of the lower amount is 5%. Any income within the range of 300,000 to 500,000 rupees, the tax on the lower amount of the range is 15,000 rupees and the rate on the excess taxable income over the lower amount is 10%. So if we consider an income of 350,000 rupees, 15,000 rupees of tax is imposed on the lower amount of the range, and for the extra 50,000 rupees, a 10% taxable income over the lower amount is imposed. So the total tax payable would be 15,000 at 10% of 50,000 rupees. Similarly, all the tax can be calculated for other range of income also. Example 1. Suppose Sonali's taxable income is 550,000 rupees and the tax percentage for any income within 500,000 to 700,000 rupees is 15%. What is her total income tax payable? So if you look at this question, her income is 550,000 rupees and the tax percentage for any income and the tax percentage for any income within 500,000 to 700,000 is 15%. So we are asked to find her total income tax payable. So in order to find it out, When we refer the table of tax, which would give us 35,000 as a tax on the lower amount of the range for 500,000 to 700,000 rupees, and also a 15 percentage rate on the excess taxable income over the lower amount. So by considering the above given table, we see that the tax payable on 500,000 rupees is 35,000 rupees, and the tax payable on the excess taxable income of 50,000 is 50,000 times 15 over 100, which is 7,500 rupees. So the total tax payable is 35,000 at 7,500, which would give us 42,500 rupees. Now pause the video and try out this question by yourself. Suppose Ruan's taxable income is 1,800,000 rupees. What is his total income tax payable? So if we look at the table, for an amount 1,600,000 and over, there's a tax on the lower amount of the range, which is 305,000 rupees, and a percentage on the excess taxable income over the lower amount is 35%. So Ruan's income is 1,800,000 rupees. So the lower amount tax is 305,000 rupees, and we need to find out the excess amount, which is 200,000. So 35 percentage of 200,000 would give us the next part of the tax. So by considering the above given table, we see that the tax payable on 1,600,000 rupees is 305,000 rupees, and the tax payable on the excess taxable income of 200,000 is 200,000 times 35 percentage, which is 70,000 rupees. Thus the total tax payable is 305,000 rupees at 70,000, which would give us 375,000 rupees. Value added tax was introduced by the Act number 14 of 2002 and is in force from 1st August 2002. VAT Act replaced the Goods and Services Tax, which is GST, which was almost similar tax on the consumption of goods and services. Apart from income tax, the government also raises money by taxes on goods and services. These taxes are called indirect taxes as they are included in the price to the consumer. This is charged on good that we buy and also on services such as meals in restaurants. So VAT is a tax on domestic consumption of goods and services. The goods imported into Sri Lanka and goods and services supplied within the territorial limits of Sri Lanka are the subject matter of this tax. It is a multi-stage tax levied on the incremental value at every stage in the production and distribution chain of goods and services. The tax is borne by the final or the ultimate consumer of goods or services. It is an indirect tax and the government will receive at the end through all the intermediary supplies in the chain of production and distribution, an amount equals to the amount paid by the final consumer. So even though sales tax looks similar to value added tax, the difference between them is that sales tax is collected by a retailer during the final sale of a good or service. It is paid by the end consumer. Sales tax is only collected a single time when the good or service is sold to someone for final use. But a value added tax is collected through supply chain. That means suppliers, distributors, manufacturers, and retailers collect tax on all qualifying sales. To illustrate how VAT works, consider the production of a personal computer. A components manufacturer buys raw materials from a supplier. Another organization assembles the computer and adds software. A retailer purchases computers in bulk and sells them to individual consumers. At each stage, value is added to the product. VAT covers the value each entity adds to the product, not the total value of the item. Therefore, when computer company sells products to a retailer, It remits liability for the value added by the component manufacturer. Example 1. VAT of 20% is charged on luxury items. If a refrigerator which is considered as a luxury item costs 32,000 rupees exclusive of VAT, what is the price inclusive of VAT? So 32,000 rupees is the amount which does not contain the VAT. So we are asked to find the price of the refrigerator with the VAT amount. So in order to do that, we know the price of the refrigerator exclusive of VAT, which is 32,000. The VAT on the refrigerator is 32,000 times 20%, which is 6,400 rupees. And by adding the two values, 32,000 and 6,400, we get the price of the refrigerator inclusive of VAT, which is 38,400 rupees. Now try out this question by yourself. A television which is a luxury item costs 33,600 inclusive of 20% VAT. What is its price excluding VAT? So the amount 33,600 contains the price of the luxury item and also the VAT amount. So we are asked to find the price excluding VAT. So to do that, we divide the amount by 120 in order to find out the amount of 1%, and we times it by 100 to get the actual price of the television, which would give us the price without the VAT, which is 28,000 rupees. An item costs 2,990 inclusive of 15% VAT. How much is the VAT? So the amount 2,990 contains the VAT also. So in order to find out only the VAT, we divide 2,990 by 115 and times it by 15. So we do that as the amount 2,990 contains actual cost of the item and also the VAT. So by multiplying by 15, we get the answer as 390, which is the amount of VAT. So that's it for this tutorial. I hope you enjoyed learning about taxes and the different types of taxes. If you have any questions, please put them in the comments below. I'm more than happy to answer them. So for all of that and more, I'll meet you in the next tutorial. Thanks for watching.